What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, boy, have we got a lot of stuff to cover. Going to give you guys a few minutes to trickle on in here. Had the absence last week. I was in Napa. And took the red eye back on Monday night from San Francisco all the way back to sunny Fort Lauderdale. And let me tell you, if you haven't been on a red eye, don't. Just don't. I guess now I know why it was cheaper and why everybody told me, Dave, don't take the red eye. So I still did it. It was an experience. And probably not something that I'm going to do ever again. Why? Well, it just throws off your whole week. So if you don't really get a lot of great sleep on the plane like me, I did not get great sleep on the plane, then your Tuesday's all messed up. And if your Tuesday's messed up, your Wednesday's messed up. And then by the time you actually get normalized, it's the next week. So I'm kind of normalized now. So that's good, and getting back to business here on this week. But yesterday, didn't have time to get this cranked out, so I'm trying to get these done on Mondays, though. There's just a lot going on Mondays. Consequently, there's a lot going on today on Tuesday, but, you know, it is what it is. So I had to scoot this up a little bit, doing it at 10 o'clock here. You know, just targeting times. We'll figure out what times work in the future and figure it out. I know that 11 o'clock time slot was kind of something normal we used to do all the time for a live trader, and we'd get a lot of people in. So that's what I was targeting, but like I said, I got to move it. Got to move it. I gotta update the lien holder on my car. It's so silly. It's always something, man. So I'm gonna do that. To Jesh, Aaron, Kurt, how you guys doing? This is going to be kind of quick-ish. We're going to try to bang through these names. Still got something funky going on. I got like a sinus thing and I don't know, I'm like hacking up like coffee. I don't know what's going on here, guys. So if you hear me coughing into the mic, I apologize ahead of time. It's just not my day so far. So why don't we go ahead and see, there it is. Making all sorts of noise. Grunting and coughing and spitting and hacking. Drinking coffee. So there's 5 names I want to cover. I got them here. Apple, Snap, Square, MasterCard, and Alibaba. Trying to see which one of these is bringing it. Which one of these is going to present the best opportunity here. So let's kick this off by taking a look at Apple. Or not Apple. I want to look at Square first. I already got Square up. As always, can you take a quick look at CRS? No, I can't. Tajesh, I can't. I got my list. It's not going to happen. No, I'm just kidding. Yeah, I'll take a look at it. Let me circle back to that here. So first, Square. As always, price consensus and EPS surprise chart here on Zax.com. The black line corresponds to right y-axis, which is price. Red arrows, earnings misses. Green arrows, earnings beats. The multicolored lines represent the evolution of our Zax consensus estimates over time. And you could see here a dip early on. But then something happened here in 2017. They kind of got it figured out. Stocks started to march higher. Now, some people will say that Square got a huge lift from crypto. Maybe crypto brought the attention to Square, but if you look at the actual reason, I think this is the reason. This huge jump in those earnings estimates. So going from, yeah, we're going to lose 20 cents this year, so we're going to make 20 cents this year. That's what caused the big jump in Square, getting it from 30 to 50, not the crypto play. While that did bring media attention and investors too coming to it, flocking, it's really the EPS. That's the underlying story here. So strong, but over the course of the last 6 months, stagnation. Hasn't moved much. Just kind of sideways. What's up with that? Look at the detailed estimates. We're going to scroll on down here to sales. Struggle is real, guys. Struggle is real. Sales, 35% growth for the current quarter. Next quarter, 31.58. Current year, 30.7% growth. And next year, 27.44. If you look at next year's numbers, or the earnings estimate numbers, see that that's not really translating on through. Well, that's a big... Not really translating through, right? Because just looking for a nickel here. Next quarter, then you get 12 cents. Current year number, 46. Next year, 71. Now, these numbers are solid, but when you realize that this EPS growth is just a few pennies, then all of a sudden it becomes less important, right? It's really not much going on there, so we don't really care. If you look at the agreement, over the course of the last 60 days, you have one analyst increasing their estimate for the current quarter, next quarter, current year. One's done so for next year. That was just over the last 30 days. And you get some downside moves too, but what's the overall magnitude here? Now, this is surprising that 90 days ago you're looking for 8 cents. Now you're just looking for a nickel. Next quarter, 11 to 12. Current year, 44 to 46. Next year, 72, 71. So not exactly the growth that that I want to see in a stock like this. Want to see a little more. Of course, they always have a tendency to surprise, right? And they've done so over the last several quarters. Let's see, how many quarters? 1, 2, 3, 4, 5, 6, 7. So coming out the gate, a couple of disappointments. Since then, it's been beat. So I'm going to go out on a limb and say that Square does beat this quarter. But is the market... What's the market going to do with it? So let's keep this in mind. We'll just say Square is a likely beat. Questionable growth, right? We'll circle back with that. Now let's take a look at the mighty Apple. Is this jumping out at you guys? It is a Zacks rank number 4 sell right now. A sell for Apple? What happened? Well, and you know it would be nice if they kept my price consensus EPS surprise chart here. So why is Apple a sell? You guys at Zacks are stupid. You want to sell Apple? No. It's not the guys at Zacks. This is what happens when we take a look at all the estimates. So let's figure out why this is a sell. You know the story. Price. Here, earnings, right? So notice how well the stock moves up with earnings. And then it tends to dip as the earnings dip. So when you're starting to see a trough here, or not a trough, but a peak, right? A little bit of mountain and it's rounding off. Does that look familiar? It should look familiar because that's the same sort of thing that happened here. And if you notice there, stock started to trickle on down. So it's the same scenario here where these estimates are rounding out, starting to come down. A lot of debate with Apple, right? And a lot of the criticism of Apple has been centered on their lack of activity in kind of the M&A space. So when you have bazillions of dollars like Apple has, you'd expect that with really no... Okay, so Apple's product pipeline is what? Sorry, guys. Apple's product pipeline is another iPhone, another iPad, another, there's not a lot of innovation that's happening, right? It's all kind of the same thing, just warmed over with the newest or whatever, right? But like personally, I don't know about you guys. I don't have an iPhone. I'm not an iPhone guy, but I'm a Samsung guy, and I've had every. I think I started with the 5. I started with the 5, and then the 6, and the 7, and now I got the 8, and the 9's out. I'm probably going to get the 9, but the only reason why is because I'm on T-Mobile's Jump program. So every 6 months, I just trade in my phone, and I just get another one. It's like I lease phones. So, I'm basically, it's the only reason I'm doing that is because I'm getting incentivized to do so. If I had to buy a new phone, like, I wouldn't be doing that at all. I would just keep it because between the 5 Edge Plus, I think is what I had, or the 5 Edge, or 5 Plus, whatever. They got edges and pluses and minuses. Oh my. And this one, like, I couldn't tell you the difference, right? Maybe it's faster, maybe it looks a little better, feels different, but I couldn't, aside from a few useless features, there's been nothing dramatic to any of these. And that's the same thing that's been happening in the Apple world, right? It's like, oh, now they got these, what are those stupid things, the animal animations that you can, like, put your face in, and then you move, like, with the animal, and it's like, yeah, that's a neat little quirk, but it's not, like, Anyway, so Apple's got all this cash, not making any investments in new technology. So draw the parallel to the drug world. A lot of the bigger drug companies don't want to spend the money on R&D, so they would rather just buy up a company that's got a promising drug and grow that way, which makes sense. Why keep rolling the dice? Let somebody else roll the dice and then just swallow them up. It's also happening in the automotive industry as these automotive companies are becoming e-mobility companies, right? And autonomous car companies. What they're doing is they're building these hubs in different locations where there's a school where there's kids coming out and trying to start their own companies and doing all the research, and then they just swallow them up when they got something promising. And it's kind of the life cycle. So people are wondering why Apple hasn't been doing more of that. Why you got the money? Why not write the check? Shareholders like it because they're like, hey, well, we'll just buy back. We'll just try to create value that way. But that's really the Apple story, right? And so that's why you have this EPS starting to round off. And that could be a problem. Now we're going to see this in black and white here. As we go over this, why is this a sell? And again, it's not because us, there's a few yahoos and Zacks going, I think Apple's a sell. It's all about the other analysts and what their estimates have been. So if you look at sales, that's still pretty solid. 15% year-over-year revenue growth for Apple. That's significant. Next quarter, 13. Current year, 12.5. Next year, though, slowing to just 2%. Now, if you look at the EPS side of things, this is where they do some engineering, right? Because, yes, 15 is good, but no, we're going to get 28% EPS growth next quarter, 26. Current year, 22. Next year, 10. When you see 2% revenue growth and 10% EPS growth, increased efficiency, sure. Better ROI, yes. Financial engineering, you bet. Okay? So, that's kind of the Apple story. And if you look down to the downside, has been where all the estimates have been, right? nothing to the upside. Nobody getting bullish, everybody getting bearish, but just a tad bearish, right? 279 down to 269 for the current quarter. 212 up to 220, then down to 211. I think you're going to see that here a lot, right? It's from 60 days down, from 60 days down. So that's why there are fours, because these analysts have kind of taken it back. Now, look, you got to realize that what happened here, though. So Zach's, we're going to put the majority of the focus on the last 60 days, but 90 days does tell a story. So what happened here is they ratcheted it up and then had to scale it back. Okay, that's different. That's a much different pattern than them just ratcheting it back the whole time, right? So this is the sort of situation we're looking at here, where they ticked up estimates big time, had to ratchet them down a little bit. So I would say that this isn't a screaming sell, right? This is just like a little caution, have a little caution here is what these analysts are saying. So let's put this up here too, so we know. So Apple, a little caution. Let's call that tempered expectations. Was that a Saturday Night Live thing or Mad TV when it was like lowered expectations, and then the guy would talk for a little bit? I know Kurt knows what I'm talking about. All right, so that's Apple. We'll keep that in the back of our heads. Now, who else we got? How about Snap? Now, I loved to hate this stock early on. Partly, well, not partly, 100% because the CEO is a little too cocky for what was happening around him, and specifically this, right? New company, and your estimates were going in the toilet, right? As did your stock price, my friend. Stock up 27, came crashing down to 12. Still a lot of erratic behavior here. But could this be normalizing, right? Could we finally have turned the page here? Is this going to level off and then start to trough? So here's what your risk is. Are we troughing? Or is this just a leveling off before another dip down? You do have the beat last quarter, which was met with a rally and then a furious sell-off. And then a beat the quarter before. But this is about as erratic as it gets, right? I mean, these things are just reacting like crazy to earnings. I bet there's going to be a good chunk of implied volatility on this one. So let's see the detailed estimates page for them. Yeah, everybody's still, we all kind of love to. Wait, did I just type in Square? Everybody loves to hate it and hate him. Yeah, I agree. All right. Look at these sales growth numbers, though. It's all about these revenues. 64%. That's incredible. 62. But then when you realize, oh, they're making a couple hundred, 240 million, 300 million. That's starting to get pretty significant, right? 1.34 billion this year, 2 billion next year. So solid growth numbers, what they're expecting there for Snap. On the EPS side, don't worry about it. We're still growing. Negatives. Whenever you see a bunch of negatives, the growth just doesn't quite matter, right? You're still losing money, right? Oh, well, we're going to lose 53 cents this year, but we're only going to lose 31 cents next year. Lots of investment happening, and I get that, right? But a year ago, hey, we lost 61 cents last year. Do have some analysts increasing their estimates, but these have been just kind of little small ticks up. Now we're going to lose 17 cents instead of 18 cents. You'll lose 16 instead of, right? Just little ticks up here. Not significant leaps and bounds. And look at this, the most recent estimate, a little bit negative earnings ESP, but they have beat. Well, met last quarter, I guess, and then small beat last quarter. 2 quarters ago they met. So, what can we say on our quick little what's our Snap judgment on Snap? Still not making money. Likely huge move ahead though, right? A GED. Yeah, if an ag head. I had one of those once. Ahead. So I'm gonna check in on that one, on its implied volatility a little bit later, because I think that's gonna be something good to take a look at. Then we got MasterCard. You're gonna like this. Zach's ranked number 2 buy. Look at this. Folks, this is what you want to see. Up, up, and away. And the stock is going. Right? Last time they missed, early 2014. It's just a winner. Okay? It's a winner. It's a winner. It's a long-term winner. And it's something you want to own. Plain and simple. I'm not even going to go into the other numbers right now. This is enough to know what type of stock this is and what you should be looking for. MasterCard is one of those winners. Whenever you see this bottom left to top right, those are the stocks that you can just stick with and forget about it. For so many reasons, right? Just as the economy improves, people are more likely to use credit. They're more likely to spend money. MasterCard makes money on all that. All of the above. Last one I want to check in with here before we start digging into some of these options chains is Alibaba. Good old Alibaba now. Again, look at the rounding off of this EPS here. Oh, I hope not, Josh, because everything looks good on my end. A rounding off of those estimates. And you'll see the stock is kind of rounded off as well, right? So this one I definitely want to dig into the detailed estimates and see what's going on. What's up with this? Why are we rounding off? It's not what I want to see if I'm super bullish on something. Not saying I'm super bullish on Alibaba, but just not what I want to see. Zach's ranked number 3. They were before the bell on Friday. These sales growth numbers are still eye-popping when it comes to Alibaba. 64% for the current quarter, 57% for next quarter. Current year, nah, that's a website related thing. And the next year, 41.5%. Those are huge numbers. Huge revenue growth numbers. And it's translating to EPS also. So you got 42% growth for the current quarter, 20.5% for next quarter. Current year looks like 48. Next year looks like 32. These are still huge, eye-popping numbers for a company that's as large as Alibaba. And you do have some ratcheting down of these estimates here. Last 30 days, 6 estimates to the downside for the current quarter. Next quarter looks like 2. Current year, 5. Next year, 5. You guys are so quiet today. Man. Is this thing on? If you look at the magnitude, gone from 106 to 90 cents. Next quarter, 162 to 147. So this is actually a... You know, I think this is kind of significant in the current quarter and next quarter, where it's muted overall for the current year numbers and for the next year numbers. It wasn't? That's so weird, guys, because I literally have no indication that anything happened here on either. Not just the YouTube itself is showing good health the whole time. But I haven't had in my streamer, I haven't had any Any dropped frames, it says, so that's weird. Must be a YouTube related issue, my friends. Sorry about that. Anywho, so a little bit of a ratcheting down here, less further out. I don't know. So for Alibaba, I'm going to say expectations tempered for current quarter and rounding out the year. Let's look at some charts and just see which one of these charts is jumping off the page. So Square, you've got a stock that is back in this no man's land. And this has been a theme that I've seen everywhere in the market recently. Stock getting underneath their 50-day, over their 200-day, and just stagnant. Now, the thing is, this is a little bit different than the stocks that I'm talking about, because most of those have had a either almost horizontally sloped 50-day and 200-day or a negatively sloped one. At least here we still have a nice positive overall trend as the 50-day is kind of, you know, wavering a little bit, but not much. So I still like the overall trajectory here on Square. So still a pretty bullish chart on Square. Apple, look at this. A dip underneath the 200-day. Last time that happened was in February. It's happened again here. And last time you did have that dip, the stock came back to highs. Here we got a failed breakout. Gets back to the highs again. That's not so good, right? So I think there's a lot of people playing this, looking at us breaking some necklines, and I think that's what this is. Some technical downside action, especially underneath the 200-day. But what you got to realize is, for a fund manager to come in here and start dumping Apple underneath the 200-day moving average, you got to have a very compelling reason. I think you've got a much more compelling reason to buy Apple here. So from a technical perspective, I am a bull on Apple right here. Absolutely 100%. This thing is oversold. I'd be looking for a CCI buy over the next couple of days and a move back to the 178s, 180s. So that's sort of jumping out on me here on Apple. So a technical play. Technical, big bullish. That's what I'm just going to say there. Technical, big bullish. Let's look at Snap. This is an uggo. There's no rhyme or reason here. There's a lot of Chop City. There's some ugliness. So that's just noise. Snap, just technical noise. Just all over the place, right? You got a big gap up. Can't sustain, gets back into the gap, fills the gap. So now we've filled the gap. We're underneath the 200-day, underneath the 50-day. Just looking, just swimming around, looking for love. Bunch of noise there on Snap. MasterCard again. It's a beaut. It's a beaut. Last time MasterCard was down under its 200-day moving average was July of 2016. Since then, it's been, the 50-day has been its 200-day. Now you are starting to get, it is kind of rounding off here, but the whole market's kind of rounding off here, right? So I wouldn't hold that against MasterCard. So let's dig in the bar chart here. Yeah, you're right, my ad blocker's on, buddy. And a couple of things that I wanted to look at. The first is Apple. Just because of that chart, the chart is really the compelling part for me on Apple. I'd be looking to go vertical on Apple. A couple weeks might be enough time. I can go a little further out if I want, though. I can go to the June expiration. I can go to June. What is this? 165, 167? Nah, let's not do June. What does the June 8th look like? Yep. I think this is my play. Actually, you know what, guys? I'm getting ahead of myself. Let's keep the continuity here. Change from the near money to the side by side. Got 167.50, so the at the money call is going to cost you at the money call is going to cost you 330 by 335. Let's call that 333. At the money puts are going 470 by 480. We're going to call that 475. So market's looking for a little over $8 on this move, or just under 5%. So we're looking about $8 or 5%. Now I'm going to go back to my June 8th expiration. Switch from side by side to the stack view. Now let's go ahead and get vertical. The market talking about $8, and I was talking about $10. That's what I saw. That's what I saw in the chart. And you could do either one here. I'm gonna look at this 167.50, 175. $167.50 call is going to cost me $503. Simultaneously selling the 175. I'm going to get back $220 of that. So $283 is going to be my net outlay on this call spread. Difference in strike price is $750 minus that $283. I can make $467 on $283 or 165%. And I would need shares of Apple to close at or above $175 at expiration. I like that. It's aggressive. It's not too expensive. And like I said, I really like the pattern that's shaping up here on Apple. So I'm going to say bull call spread, long. Bull call spread on Apple, long June 8th. 167.50, 175. Call spread. This was a 283 net debit. I would probably pay $3 for that, in the hopes that Apple moves to the upside, catches some bullish action. Gives me enough time for the technicals to take over, regardless of what happens on earnings. So I like it. So that's an Apple idea. I've got, who else did I want to look at? Snap's a lot of technical noise. I still want to see what their, how much implied volatility is in this Snap move here. So here, let's look at this front week, and again, let's move to the side-by-side view so we can see what they're pricing in here. $14 on Snap. At the money call, 114 by 116, that's 115. At the money put, 110 by 113, we're going to call that 112. So that's 227 they're looking for on a $14 stock. Looking for a 16% move out of Snap. I bet they get it. What side it is, who knows? This thing's just madness, right? There's all over the place on this one, right? So I don't really have a good beat on or a good read on Snap, so I think I would avoid that one. I just think it is going to move pretty decently. I think I'm passing on Alibaba. The Apple play looks good. Square is running into some trouble here. MasterCard. I want to give you a MasterCard idea, and then yes, I'll address some of the questions that we got here because I'll have a little bit of time. So a MasterCard idea. There's a lot of things that you could do here with MasterCard. You could do buy rights, right? So if you wanted to buy 100 shares of stock and then sell it out of the money call. The other thing is just selling a put. Just selling a naked put, and then if the stock dips down, then you get assigned, right? But this is if it's a stock that you want to own over the long term, then it's a decent idea. So on MasterCard, basically 167.50 I think would be a decent area to go ahead and sell puts if you want to get something much cheaper. It's not going to be a ton of money. It's going to pay you 34. That's just that week. We could go out a little bit longer. 175s. Where am I? 167.50s. So here, if you go out to the May expiration, you can get $1.02 for selling that 167.50 call, or 167.50 put. That would mean your cost basis is going to end up being, 166.50 should the market come down there. So if you're a long-term guy looking for a way to get in on MasterCard, that's a way. If it never gets down there, then guess what? You just get to keep that money anyway. So that's for some of the more, conservative minds out there that were looking to get in on a stock like MasterCard. Or you could do, other thing I like to do with stocks like this, where I think they're going to go up slowly over the long term, is you can get vertical on a stock like MasterCard. And, you got 175s. You can go long a 175. And let's see, where's the top end of this? 184, right? Something like that. Just call it 185. If you notice here, it's basically a 2-to-1, right? So you're going to risk $5 in the hopes of making 10 on a stock that's been trending to the upside strongly over the last, year, 2 years, 3 years. Slower kind of trade. Doesn't have the excitement of earnings play, but it's a pretty good payoff. So that's a way to roll the dice on something like that. So I'm going to say a longer term MA call spread is what was this? Out in June. You can go out in June. You can even go further if you want. Look if you go out to July. $175, $185 is basically going to be the same. This is going to cost you $5, $10. You could probably sit there at $5 and get filled at $5. So I'm just going to throw this out there for people. July 20th, 175, 185 call spread. Aim for $5. And that's just a slow and steady, trend following chill. sort of idea for you. Just hope that it keeps on keeping on, right? So there's my idea for that. All right. Now let me get back to answering a couple of you guys' questions because you guys are firing them out there before I have to bail. So what did you do here? $34 puts on CRUS, and they're reporting. So you're looking for the stock to break down through the 52-week low. So you're expecting bad results, right? Okay. All right, let's see. So that 34 put is 65 by 70 right now. And we want to see if the... Let's look at this price consensus. It is a Zacks rank number 5. Strong sell. Lots of negativity there. Yeah, haven't reported yet, so... Right? I'm reading that right. 5.2. Looks like it's negative. Looks like the price consensus is negative, so we're just getting weighed down on. So let's just see what happens. I suppose. It's rallied a little bit here. Not sure why, but it has. Just with the rest of the NASDAQ, right? I think, Tajesh, I think what this is this is a NASDAQ-related move, not a company-specific move. So if you still have a bearish thesis on the earnings, I would wait for that to play out, I think, is the way to go. You got to see. You got to see what's going to happen. If you're chicken right now and you're nervous about it, you know, when in doubt, get out. It's pretty much the name of the game. But, you know, you got to ask yourself, has anything changed to your underlying thesis? And remember, your risk management on these trades happens before you enter, right? That's why you use options to do it. You've already detailed specifically what your risk is heading into it. So, there's that. And a quick look at who's... are you talking Groupon? I'm assuming that when you said group, that you put the ticker in wrong, right? Asger? I don't know. You gotta give me good tickers. I can't read mines here, but maybe, unless you're talking, the G is close to the T. Maybe you meant True Panion. I don't know, man. What are you looking for? True Panion or Groupon? I don't know, buddy. What can I say? So, alright, well, that's all I got. It sounds like there's been some problems here with the stream, which is weird. Like I said, I don't have any problems on my end as far as the stream is concerned, so we'll try to get down to what happened there. But I could tell by the lack of activity here that something is fishy. So we're just going to end it here and try and get back to our regularly scheduled program next week. I'll be in the chat a little bit later on, but for now, that's all I got, and I'm out. Thank you guys for hanging out here, and I'll see you later.